The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
And what do we have going on? Well, 43 points higher in the S&P 500, back to 2631. The Dow's it's up plus 450. The Nasdaq's up 125, and the Russell is up 13.5 points. Crude oil's off 40 cents. The big movers out here, of course, going to be anything dollar denominated. You're down 53 cents on the dollar. And every time this market thinks it's ready to crack wide open, something kind of happens. Something kind of moves along. Anyway, I thought that we were within a couple of days of finding a bottom in the market. We may already have one, at least going through the next week. What I do see is some really good opportunities for maximum risk reward. I added one position in the long-term newsletter last Thursday, and I picked up a new option position today for the daily newsletter because I thought, man, here's one where I've got maybe a 700% return possible on an option, and if I'm wrong on a $25 stock, I'm going to lose $1. So to me, the risk reward was absolutely fantastic out here. That does not mean I think the entire market is taking off to the moon or going to Hades. But I do think that there are some standout opportunities, especially in options, because a lot of people, including me, are going to be afraid to throw a lot of money at equities in this market. We'll see in the next couple of days. We're going into fund buying. Preliminary data suggests that we'll have a fairly decent, good inflow over the next 7 trading days or so. That won't start for another day or two, but normally the markup starts before then. There's 2 things that can happen. People can sell in for every buyer. There can be a seller, and the market just goes sideways. Not a good sign during fund buying. That money comes in every month, whether you want it to or not, for 401ks, stuff like that. And the question is, in the last few months, we had people getting out of the market. Most of those people, I suspect, that were going to sell at the highs have probably sold. So I'm looking for a little less selling into fund buying. And like I said, I think, if you pick your battles, and I know a lot of people are fixated on only trading the S&Ps or only trading the Nasdaq or only trading the Russell. But I think individual stocks right now have the best risk reward. And also there's some real sleepers out there. A lot of things not people paying attention to. The less that they pay attention to, generally, the better the opportunity, because the other people will come along later when they see the opportunity, not when they should have been looking for it. So I think there's a lot of stuff going on here that should make people happy. And if not, like I said, if I was trading a $25 stock and had to take a $1 stop, sell it at 24 bucks, no one would think a thing. But if I can only lose $1, but maybe win 7, I think people probably think a lot differently. Now, what are the odds of that happening? I think they're 50-50. So all I got to do is find great opportunities that have huge risk reward and play them, and not get too wound up of whether or not I won or lost, or I was right or wrong. As John in the Den reminds us all the time, it's not about being right, it's about making money. And if you have set your odds, you think you know you're right, then you let your ship go out to sail. So maybe you have a ship that comes in. Anyway, we're up 49, 50 points on the S&P cash. Am I looking for a whole lot? No. Could we get up back to somewhere between 2,700 and 2,750 on the S&P cash through expiration April 20th? I think that's infinitely possible. I think a lot of what's going on after I looked at charts all weekend long was yet another sector rotation. And I get a lot of questions about the financials and why they're acting the way they are. My thought is that what we have in the financials is a change in the way that people are looking at the markets. And by that, I mean that the big budget from last week has a lot of people thinking that the government will be the first pig at the trough when it comes to getting cash for bonds and treasuries. People will buy them first before anybody else's, before any businesses or anything else, and that they will soak up all the easy money that there is to lend. Therefore, there won't be a lot of money to lend for those folks that are in credit cards and all kinds of other things. And if they don't lend, they don't make money. And why we're probably going to see some bounces in the financials, I think there's going to have something, there's going to have to be something that changes that opinion. But we saw a few things happen last week, and I think the change in psychology was just that. We are now looking at the government being a huge borrower to the exclusion of edge case borrowers, or those that might, with a little trimmer budget for the federal government, might be able to get hold of cash and now will not. And even though you get higher interest rates, maybe those financials were thinking higher interest rates and a lot more business at the same time. I think we're looking at higher interest rates and probably less lending, especially on some of the risky things that they shouldn't be lending on already. So it's probably long-term good, short-term bad for financials. They won't be able to go out and do stupid stuff again like they did in 2008. The money might just not be there. So when people ask me why things look sad in the traditional marketplace, a handful of reasons. Regulatory, we might actually see a little bit more of that, even though the thought is no. And a lot more. First, pig to the trough. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
History repeating. On this day in 1953, American medical researcher Dr. Jonas Salk announces a national radio show that he has successfully tested a vaccine against polio, the virus that caused the crippling disease of polio. In 1952, an epidemic year for polio, there were 58,000 new cases reported in the United States and more than 3,000 died from the disease. And in fact, I saw a guy on TV, I'm going to say a week ago, who's the last living survivor in a iron lung. And they had to find some of the old iron lungs and have people remake parts for them because they're falling apart. He's the last man living in an iron lung for polio. So, kind of interesting stuff. Dr. Salk was celebrated as the greatest doctor, benefactor of his time, and you might think of all time. I know a lot of people are nutty what are those cakes they give you at Christmas? Nutty as a fruit cake about vaccines. They believe that they are evil in some way. All I can tell you is the evidence says that the greater good is massively overwhelming for most viruses and vaccines. And that all you have to do is look at that number and look at the how many died in a single year, died in the next 20 years from it to figure out that vaccine's probably a pretty good thing. What do we have going on out here? Well, the market's warming back up. We're up 52 points on the S&P cash. Dow's up 519. What's the high in the Dow probably today? Plus 700. I think you could probably get there. One of the things that I've always enjoyed from almost on a monthly basis is going back and looking at the book Reminiscence of a Stock Operator, because everything that happened to him has eventually happened to me, or most everything, in at least the psychological way of trading. And you know what? The one big thing he had in there is if everybody turns south in a down market, get ready for a pop. And, if everybody is looking lower, Mr. Market's pretty good at saying that that's probably it. Friday's descent into pessimism, probably a good place. If it wouldn't have been the weekend, if we've gotten a signal, I probably would have bought a few more things going into the weekend. But I thought maybe we may even see lower prices all the way through noon today and slowly start to firm. I'm just glad I got to get into a position today that can make some huge cash, even though I didn't plunge on Friday without a signal. And, no position's always a very valid position. But give me the opportunity to come back and at least get one today that has a massive risk reward back for us. Okay. So what else do we have going on? Well, we'll start looking at some charts fairly quickly today. You can always give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can always post a message in the den. Boeing, let's see how some of these things are reacting. A little pop higher, not a lot of volume in this one. But kind of the interesting thing about Boeing is it did get basically into these previous lows. February 5th, you saw 10.5 million shares. February 9th, you saw 8.8 million shares. You got to a high of 7.3 million shares on the 22nd. The 23rd, on Friday, we saw 7.2. So you're basically in that range of coming down about 30% off the highs. Now, energy did come off, and we talked about this last week, on a lot of these stocks where they actually accelerated off the highs. So even though they test on lighter volume, I will assume that these will need some level of consolidation before they go higher, if I was thinking bullish. And that level of consolidation is probably going to take a little while. Even then, with acceleration off the highs, you probably shouldn't look for an instant retest of the highs. James Wyckoff called these things automatic rallies if they had no preparation for higher prices. That is, they came down, with more energy, then maybe even they had more volume at the lows. They've got to bounce a few times. They've got to get the downtrend stink off of them before they go higher. But what we see there is kind of in the lows is, maybe a trading range between here and 350, maybe 360, and maybe then another retrust of the lows. So I'm not predicting that we're out of the woods for the rest of the year. I suspect we probably have some trading range for a while until the market starts to adapt to bigger spending by the government. How does earnings actually get affected by these new corporate tax rates? Do these guys yet find another way of not paying taxes and hoarding their cash? And how much of that money actually comes back from the likes of Google and Apple? Apple had one of the bigger moves out here today, or at least earlier in the morning, along with Microsoft. Okay, what do we have here? Okay, Apple got to 164.94. It broke through this gap up that had 51 million shares with just 41 million shares on Friday. So at that point, you probably would have looked. So far, the energy is fairly good on the downside. So it probably the worst, even if you're thinking that you're bearish in this market, you want to look for some kind of ABC in maybe some of these bigger ones. So when we look at things like Apple, I'm not thinking this is some kind of ABC that takes us to 198, which would be the ABC off of Apple. I'm actually looking for this as just kind of a normal retracement, which would take you to 174.22 on a 50% retracement of Apple, or 176.41. So maybe when this thing gets up into that area, if you want to get bearish again and suspect an ABC on the way down, you basically had a $18 ABC on the way down. If this gets up to 176, then that takes you back to, what, 158? Yeah, that would take you down to 158. And guess what's there? Nice big gap in October. So, to me, if you're bearish in this market, I think you want kind of a decent bounce out of it. A lot of these stocks tested their previous support levels with wider volume. And even if you're bearish, bounce, prove you're right.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Some people have emailed me, asked me why. Well, as I said before, a lot of these stocks have tested previous lows this morning. And of course, Tesla, one of the biggest dogs, one of the ones that I hope to get a opportunity to short once everybody quits shorting the devil out of this thing. We've got a fairly good chart out here with the test of the November 2nd low, 292.63. That had 20 million shares. So far, we're in this saying around 7 million shares so far. I think the chances of us blowing that out are probably fairly lean. On my power law vector indicator number, basically had a 5.2 on the way up and a 5 on the way down. Just think about it as paying a power bill. How much did it cost to push it up? How much did it put back in the piggy bank on the way back down? Basically the same up and the same down. You haven't really had a significant pull back where everybody is throwing the baby out with the bathwater in Tesla. I was lucky enough to get it short. We got about 30 bucks in the daily newsletter on it once. But other than that, you know, you're not going to retire on those. And again, these things moving $5-6 on a daily basis is going to be kind of tough. But the light volume today does tell me that we probably have at least, maybe through fund buying, a little bit of sand underneath. Now, does that mean that we're instantly going to go up? No. The way I'm looking at it now, either we probably go up through fund buying in next week. In fact, let's get the calendar up. That would take us through April 3rd for normal fund buying. Sometimes that goes into the 4th. So we kind of have about through next mid-Wednesday a little support in the market. Now, if we have a lot of volume come in, then maybe they're just front running it and the market turns back down. Then maybe we get a lot of volume and people that were sitting around with cash that come in and probably buy different things than they bought before. I'm not thinking they all pile right back into the same things that were running before they massively cratered in the last week. But we shall keep an eye out. Up 55 in the S&P, Dow's up 533, NASDAQ's up 172, and the Russell up 18. So, what do we have here? I'm not quite back into the money yet, but we're looking that way. Let's take a look at some other stocks. One of the things I would have thought that would have pushed the market up today would have been the IBB. This had kind of come back on fairly light volume and continues to show that this thing, not a lot of sellers and not a lot of buyers either. You would have loved to seen this thing at least go up and tag 130 if this is going to be the new hot sector of the year. I keep on thinking that they're going to come back to this, and then every time that happens, the president comes out and says he's going to sue the OxyContin makers, which are probably a big enough part of this IBB to put a pale on it. The thing to do may be to go after individual biotechs, or even maybe do a third and a third and a third to get one position out of 3 biotechs. Again, we're starting to see some of these levels that will look like fairly decent resistance levels. And this one's not very far up, about 110 on the IBB as we trade out about 107 or in the mid 107s. But again, as we've been talking for a while, we weren't able to make new lows in the last 2 days in the IBB. We continue to see a lot of these stocks that did break, though, these triangles of the last, 3-4 trading weeks. And, of course, I tend to fade the first break. Since that break was on the downside, I try to find ones that actually look fairly good. And if they blew out the bottoms, you you can probably make a fairly safe bet that they'll go back at least to the resistance levels. And in the case of some of these stocks, they got hammered enough that just making it back to the resistance level is a huge gain. Got a question about Qualcomm. Talked about 5G on Tom's show on Friday afternoon. Qualcomm probably continues to own this. Now, they got down a little bit more. It's at 55 something. Is that right? Why did I get that correct? There it is. Take a look at this here. Okay, you got a little bounce out of here. Now, the question is Qualcomm and what's going to happen to it. What we've seen is a lot of these stocks, especially things like Qualcomm, are probably going to have about another 4 months, maybe as much as 6 months before these orders come in for all the 5G stuff next year. So if you're wanting to take a look at Qualcomm, if the market would have held up, it probably would have gone sideways for a little while. But with kind of a pale and the whole Avago thing kind of going down, people are going to be out of it for a little while. You know, is this thing done? No. I think right now what we're going to see is a lot of people on Wall Street badmouth this one ad nauseum and try to get it as cheap as they can and downgrade it. And then, surprise, surprise, next year, there are going to be upgrades galore, as this thing is the preeminent 5G company, and 5G is probably the biggest trend in 2018. So we've got a little bit of that going on. How about KRE? Let's take a look at KRE. Okay. Regional banking. We talked about, I think, a little bit about this last week and how some of these bankers are looking and doing. Again, you had energy actually increase off of the high of March 12th down to this gap. The gap did come in with lighter volume. In this one, the thing you've got to really look for is your maximum resistance level is at just under 61 bucks with a confluence level there. You've broken that level, and now you're coming back under it. Above 61, then you probably look for 62.46, something like that. That's on the longer term one, or 62.84 on the shorter term one. But both of those are kind of in the area you'd want to look at. But again, anything that came down with heavier volume, I suspect you've got some level of consolidation to go before these things really move. If the things were truly hammered, you probably got 3 or 4 days of short covering, and that can drive these stocks up fairly quickly because we had a lot of people piling on come Friday. And we'll talk more about that when we return.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks! Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal is 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're back. And, of course, just tooling along here, up 55 on the S&P cash. And 20 on the Russell, 173 on the NASDAQ, and 546 on the Dow. So we had somebody that wanted to look at Facebook.
Oh, it seems to me the siren seems to be the hardest word.
Oh, they're sorry. That's good enough. Lost a leg. It's okay. I'm sorry. 10 dead on the highway because I was drunk. I'm sorry. Okay. Anyway, the Facebook people, man, are they sorry. Anyway, they're sorry they got caught. That's what they are sorry about. Anyway, who wants to see this here? Jim from Denver. Okay, Jim from Denver, if you didn't buy this at 149 or 150 or 155 or something this morning and out of it already, I don't see any reason to be in Facebook. From a chart analysis standpoint, you've got a few things, and then we'll talk about the fundamental. 164 to 163 is a great level of confluence. And that's where you're going to find maximum resistance. If it breaks above that, then maybe you can get up to 173. I just don't see playing this thing for $10 or $5. But certainly that's it. If you were lucky enough to buy it at lower prices, 164 would be the way that I was out of that after buying it this morning. You could see this thing go a long time sideways. Now, when we get to the fundamental story of Facebook, it is nothing but more people piling on and virtue signaling about getting rid of Facebook, and we'll probably have a few more of those people jump on that bandwagon. But you got congressional testimony, probably declining profits at the same time. Facebook could probably get through the PR nightmare if it wasn't the PR nightmare with a dagger at its heart of profit, which is selling you as a commodity, because you are the product, just like you are the product at Google. The question is, what do they do with that data? And where was Facebook selling the data or giving it away to their political party of choice in 2008 and 2012? Yes, we already know that. One of the big, what was the guy in the Flintstones? I forgot what it was. I'll think of it here. But he was the grand poobah. One of the grand poobahs of Facebook said that they gave all the same stuff out to their chosen political president back in 2008 and 12. So is there really anything new in what these guys did? No, the only thing new is that they gave it to somebody, or at least sold it to somebody that they didn't want it to have it this time. So the question is whether they do stuff with data or not. I don't see a big change in it, but that's it. It is, yeah, Fred and Barney. But it was the poobah. There was the grand poobah at the lodge, right? I always remember that. Anyway, Facebook could be good, but what you want to do is wait until this thing is off the front page. And you got to figure that in 2 weeks, we'll have some congressional testimony. They'll take their pound of flesh. They'll demand Zuckerberg is there. Everybody will look at it, and eventually that will fade. I remember when everybody told me how Intel was cooked, that their chips were just so flawed that nobody in the world would want to have Intel. And the answer, because first of all, it was built on a premise that was not true. You might look at Facebook being the same thing, but Facebook coming off of the, what was that, January 29th high at 50.59 went down to 42.04. Since I don't believe the premise that anybody truly cares about Facebook, other than the fact that they want to excoriate Zuckerberg for helping somebody they didn't want him to help, and make sure that he doesn't do it again, and slap his hand and take him out to the public square, put him in locks, throw some food, rotten food at him. Yeah, that's it. So is it that much different than Intel? I think the difference is in Intel, it was totally made up. This is probably about a half truth for Facebook. I just think that the truth was well known in advance on Facebook. In fact, there was a lot of articles over the weekend that all the people in advertising knew everything that this company was giving away on the side, and Facebook knew and didn't care. They liked the fact that they had a kind of an arm's length distance, and were more than willing to get people hooked with a little taste of the kind of data that Facebook could provide. So let's take a look at Intel here, because this was a very sweet setup on this one. Again, when you're looking at these confluence levels, and if you haven't checked these things out, we'll talk about the history. Do we have enough time? We do. Joe DiNapoli kind of came up with these things that he called confluence levels, and it's where the 618 of one move gets hit, comes together with the 382 of the other one. It is a very narrow range. In this case, I'm showing you it here in this blue section with my mouse pointing at it, and it's what, 49.57 to 49.30. So fairly narrow range between the 618 of one move and the 382 of the other. And that sets up for a lot of times for very nice positions. You got to 49.36. So if you were looking to buy the ABC up in Intel, that was it. Now, does it get back up to the highs? I don't think so, but you probably got a fairly decent bump. If you were killing yourself come Friday that you hadn't sold it already, here's your opportunity. I think you're in a trading range. That trading range is about $49 to probably about $52, and we're kind of in there already. So I could see that a lot of these things could just kind of go sideways. The energy off the highs, not all that exciting. But again, we have a story that's not that old, and that is Intel, where everybody told you that they were making flawed chips. I told you that they were not flawed chips. So is Facebook dead? Probably not. It's just dead for a while. It's mostly dead. If you're a fan of The Princess Bride, but not completely dead. And you just need some time for it to kind of recharge. But I'm not a big fan of it in the future either. Everybody's going to be on them asking what kind of data they collect for a while, and that's always going to sit on top of their profits, which is problematic. Intel really didn't have anything where they had a critical flaw that affected their baseline profits. So a little different story on these two, but time heals most wounds, and it probably will on Facebook too. We'll be back in a minute.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archived workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Jacob from Orlando reminds me that I deserve an I informed you thusly.
I informed you thusly.
For Intel. So thank you. What else do we have going on here? Got a question on Micron, and I wanted this thing to kind of come back to about $50. I think you still want that $50. 47.41 is the 618.40 or $50.47 is this the 50% retracement on it. You had a big volume yesterday, kind of popping. I still suspect that you're going to get $50. And it may not be down there for very long, and it may be a couple of days, but I don't think you get a huge move. You had a lot of energy, especially on Friday, to the downside. You don't have much energy to the upside, and actually it's lower than the open. And as long as it's doing that, I suspect you still have it. The SMHs still kind of look like they have it down. And again, like I said, I think most people are going to go off and after the stocks that ran the best the last time. But I think what we have in this is a lot of people that are going to be going up against levels fairly quickly. Like the SMHs, we're right at where confluence would be. So if you get above this, well, all those SMHs look a lot better. But the confluence levels on this are 106.65 to 107.73. You got to 107.62. So you wanted to see this thing really get a follow through as it went through this confluence level, and you really didn't get it. So I'm going to say I would want to wait for a bigger swing. I don't want to bunt at these things. I want to take some big swings and probably use options to do it over the next few days. I think as we get closer to fund buying the end of this week, I'll think more about actually putting money to work into equities. In the meantime, sell when you can, not when you have to. See you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.